And President Donald Trump said that the sliding price of oil is intensifying pressure on Russia and boosting the odds for a deal to end the war in Ukraine. Quote, I think Russia, with the price of oil now, oil has gone down. I think we're in a good position to settle, Trump told reporters in the Oval Office on Monday. They want to settle. Ukraine wants to settle. If I weren't president, nobody would be settling. And I agree with that statement, but I believe that he is still misled by his team. He does not have the right information with him around him. Hello, everybody. Welcome to the Energy News Beat Daily Stand-Up. My name's Stuart Turley, President and CEO of the Sandstone Group. This podcast has absolutely got some great stories for it today. Dropping oil prices, odds of Ukraine peace deal, Trump says. I got a little different opinion, but we'll just go on to the next story here. Saudi Arabia's new oil play embracing the glut to win the long game. Saudi Arabia normally looks at the long play. KN awards contract for Klaipeda FSRU electrification project and LNG to energy port. That is a good deal. What's the future of U.S. crude oil? Have we hit peak production? That's a big question. Sunoco's $9 billion acquisition of Parkland. It's a pretty big story from a good friend of the show there, Nathan's newsletter. Let's get started with our first story here. Dropping oil prices boosts odds of Ukraine peace deal, Trump says. I'll tell you what, I disagree with this article. The article first comes out from Bloomberg. And President Donald Trump said that the sliding price of oil is intensifying pressure on Russia and boosting the odds for a deal to end the war in Ukraine. Quote, I think Russia, with the price of oil now, oil has gone down. I think we're in a good position to settle, Trump told reporters in the Oval Office on Monday. They want to settle. Ukraine wants to settle. If I weren't president, nobody would be settling. And I agree with that statement, but I believe that he is still misled by his team. He does not have the right information with him around him. President Putin has gotten by and increased a 4.2%, I think, somewhere around that range, GDP growth year on year by even selling at lower oil prices below market to keep his cash flow going. And I've included in this article the list of crude oil exports from 2021 through 2025 so far, and we are on track. And so when you sit back and take a look at 47% in January through March, 47% of the key market is China, 38% is India, and EU is only 6% of his business. So when you sit back and take a look at where 2020 was, Europe was 50% of his business, and China was 30%. Netherlands and Germany, between the two of them, was 25%. So the numbers don't add up. President Putin has done a great job moving his business to the Asia market, and EU is going to be no longer relevant as a trading bloc if they continue with their current policies. George McMillan has said it best, and he's basically said Putin is prosecuting the war against the city of London and the city of Paris, not President Trump. He's not stiffing President Trump by not ending the war. He's trying to end the war against the city of London and the city of Paris on those people that have been prosecuting and tried to bankrupt President Putin. So when you take a look at how all this is playing out, it is President Trump really needs a new advisor, and General Flynn, I believe, would be the best one. But he hadn't called me and asked for my opinion yet, but I would vote for for General Flynn in about 2.5 seconds. Let's go to the next story here. Oh, by the way, and if you would, go to energynewsbeat.co and then look at the menu up at the top and go to resources and George McMillan. Just type in George anywhere in there and you'll see an entire outline of all of his contributing stories. I thought it was a great point. Let's go to the next story here. Saudi Arabia as a new oil play embracing the glut to win the long game. This is an excellent article from Irina Slav at oilprice.com. I like the phrase embracing the glut to win the long game. I highly recommend that you do subscribe to Irina's Substack. She is on the money on this one again. And I want to give Josh Young a shout out as well, again, as he's been on X just posting some great things. I included one of his posts and Saudi triggering a further decline in oil price when Aramco's break even is 77 plus and Saudi's fiscal break even is closer to a $95 oil. So when you sit back and take a look at Josh Young, he is a true thought leader as well. I really like both of them, and I highly like this article that she wrote. Oil markets took another hit this weekend as OPEC Plus threw another curveball in the virtual meeting. On Saturday, the group, Saudi Arabia and Russia, announced 411,000 barrels per day output hike for June. At first glance, this looks like a crackdown on quota violators, Kazakhstan, which Michael and I talked about yesterday, and Iraq. But this is actually a little bit different. With enforcement efforts having failed, Saudi Arabia seems to be letting the prices do the disciplining. And if they're going to just bankrupt everybody else, Saudi Arabia is looking at this for the long haul. And I like the way Irene is pointing this out. Saudi Arabia isn't just reacting, it's adapting, trading short-term revenue for strategic positioning. This is not a war cry, it's a recalibration, and it could change the market for years to come. You got to hand it to the Saudi kingdom in the way that they think. They don't think past destroying the strategic oil reserve for the next election cycle. They think in decades rather than the next election cycle. KN, let's go to the next story here. KN awards contract for Klaipeda FSRU electrification project. And as I get started in this story, I want to give Reese Consulting a shout out. They are a wonderful sponsor of the show, the Energy Newsbeat Daily Stand-Up. Steve Reese and his team do an absolute wonderful job over there. Please check out reeseenergyconsulting.com. And if you are looking to either move molecules from here to Germany, from Texas, from the Permian, anywhere you need to move them, if you are a midstream partner and you want to make sure that you're getting all that you're moving and have a great audit, Reese Energy Consulting is the team for you. They have a great training outfit as well, too. And with as much energy as we've got going on in the United States, you're going to need some training. Give them a shout out there as well. So let's start here. This is in Lithuania's Kinano Tiali. I apologize for butchering that, a specialist in roads and bridges and infrastructure projects. KN said the contract for Epic Works of the power line construction with the FSR-based LNG terminal is valued at 13 million euros or 21 million excluding VAT. Under the contract, will design and install the electrical cable for the 170,000 CBM FSRU Independence. The cable will run through territory of the Klaipeda city and beneath the Corridor Lagoon. The reason this story is so important is we are seeing more and more straight LNG to electrical power plant modifications being done around the world, and this is brilliant. It's going to help lower the output. It is much better than coal. It's easier to transport than coal. And if you're Hawaii, you need to get rid of your fuel oil, basically, that you're using. It's worse than coal. So anyway, this is a great story. And we had several other stories on Energy Newsbeat where we're seeing more and more ships going LNG powered, which also is LNG bunkering and everything else. So the container ships are coming out huge numbers in LNG dual fueled container ships. So let's go to the next story here. What's the future of U.S. crude oil? Have we hit peak production? Excuse me, this is a great article from the Crude Truth Substack, Ray Trevino, with Pecos operating over there. I agree that a single basin output does not define the country's energy production capabilities. So has the United States hit peak oil and gas production, or is it just one basin that has hit that? I agree with Ray Trevino that we're not done yet. The United States will find a way, and let's get California under control. Ray, in his article, really took a look at what was written in oilprice.com. Charles Kennedy wrote this article out, and he says, Charles Kennedy from Oil Price says, Energy Flows Intelligence, Kepler forecasts that U.S. crude oil supply growth will slow for the rest of 2025 and into 2026, with peak as early as this year. Attributes this revised forecast to WTI crude oil prices falling below $60 per barrel, which is testing the break-even point for many U.S. shale oil producers. With WTI, the main benchmark crude is near break-even at the new well levels. And if you look at the chart that we've had and we've talked about in the past, is from the great Dallas Reserve Fed of Dallas. You look at other shale plays at $59 break even, Permian Midland 62, Permian Delaware Basin is 64, Oklahoma Scoop Stack is around 65, other is 66, but Permian Basin other is up around 70 depending on the water volume. Water is becoming a critical issue as you're having to pump more of the water in and you're getting more water back out and less oil as some of you're moving on to the second tier problems in the Permian. I don't believe the United States has hit peak oil yet. We still have a lot of oil going on in Alaska. In fact, Gavin Newsom, let me just point out this point that RT is making in this, and that is California was energy independent before Gavin Newsom. The refineries, as Mike Umbro told me, Mike Umbro pointed out that the refineries in Alaska, refineries are capable of in California of using Alaskan crude. Why are we importing 70% of the fifth largest economy in the world is a real question that we need to ask our leadership. Why? And if I was a California citizen, I'd be asking, why did we have these constant elections up there? Let's go to the last story here before I have a blood vessel break talking about Gavin. Gavin, if you're listening to the podcast, you're always more than welcome to be on here, but I don't think you'd like to listen to me ask you about your politics. So let's go to the last story here. Sunoco's $9 billion acquisition of Parkland. This is a great story from Nathan Substack. I like Nathan Hammer. He's a cool cat over there, and I recommend following him. Sunoco, a major player in the U.S. energy sector, has announced a landmark deal to acquire Parkland Corporation for $9.1 billion. It's a strategic move to set the largest retail fueling convenience store giant in the Americas, significantly expanding Sunoco's footprint across Canada, U.S., and the Caribbean. This is really cool. It includes cash and stock options, with Parkland shareholders receiving 29.5 Sunoco units and CAD at $19.80 per share. Alternatively, they can opt in for CAD at $44 per share in cash, or 53.536 units. 0.536 Sunoco units. The acquisition promises immediate financial benefits, including over 10% accretion to a distributable cash flow common unit and $250 million in annual synergies. This is actually very cool. For the Sunoco acquisition, Parkland is a strategic masterstroke that positions the combined entity as a dominant force in the industry. This makes a lot of sense, and hats off to them for getting this $9 billion acquisition done. And synergies of scale matter when you're in the transportation world. So we'd like to just give a shout out to all of the folks that are listening to the Energy Newsbeat podcast. Go to the energynewsbeat.co or the Substack, theenergynewsbeat.substack.com. I've got some fantastic podcasts coming out, and scheduling Doomberg again. Got Doomberg. He's getting on the calendar. I cannot wait to talk to my favorite market leader and ask his opinion on what he thinks is going on out there. So have an absolutely wonderful day out there. We'll talk to you all soon.